I just want to get a breakdown right now of where we are. I mean, we're seeing the market drop dramatically, and then we see it, being pushed up, and then we see it drop again. And it's just been crazy since the beginning of the year. So where are we in the economy? I mean, are we heading towards this collapse right now?
Oh, absolutely. We've been in this collapse, in my opinion, in quite a long time, for quite a long time. I don't believe for almost a decade now, the stock market has been in touch with reality, at least since the 2008 event, and what the Federal Reserve has done to try to prop this all up, colluding with other world central governments. Nothing is real. Nothing is real across the spectrum here. But again, it's part of the illusion. These entities, the central banks colluding with the policymakers, have created an environment which I don't believe we have ever seen. In fact, I know we have never seen in the history of the world, where we have a global slowdown, markets completely detached from any sort of reality, being propped up by cheap money, easing programs of every imaginable type that you can think about. And again, we may be at that moment here where it starts to correct. I mean, this has been my theme since forever. I have been saying that this market is going to correct to fair market value at one particular time, despite actions of world central banks colluding with the policymakers. It has to happen. The only job of these markets is to determine fair market value. I'm not just talking about stocks, I'm talking about currencies and debt. Debt is a big one here. What is the value of the current global debt? It is zero, Dave.
Hmm.
So they can't allow that to be realized, that this debt can never be paid back. It's the largest bubble that has ever been inflated in the history of humanity. In my opinion, it is the greatest threat to human life. That's another theme I've been pushing forever. People do not understand what it means to be in this debt bubble here. We are clearly in a global slowdown. World central banks are going to try things and continue to stimulate, pull things out of a hat that we cannot believe. This market has fallen through technical levels, which I have been speaking about very much lately. At the end of last year, I had the market was in a very specific technical pattern which broke down. I didn't think it was going to. I'll be honest with you. I was bullish for a while there, and then we broke through one level, we broke through another, we broke through three critical technical levels so far, and I'm not convinced that we're done, Dave.
At the end of 2015, the Fed came out and they increased the Fed fund rate by 25 basis points. And going into 2016, you're continually hearing them saying, oh, we're going to raise this, another 4 times, another 6 times. And then on the other hand, they're talking about zero interest rates or negative if the economy doesn't do well. I mean, what was all of this about?
Well, first of all, the Federal Reserve obviously has a major credibility issue here. They didn't want to raise rates. And let me just say this about raising the federal funds rate. Let's look at the real world, what is occurring right now. Interest rates are falling. They are not rising. The US 10-year at the end of last week dropped below 2%. So where's the rate hike? How is it affecting the average person here? The Federal Reserve can say anything they want to do. If they want to raise the funds rate 25 basis points, that is not going to do a thing to nudge interest rates in this environment. What the Federal Reserve is facing right now is I don't know how to put this. It's like a mountain or a tidal wave of debt which they have created. So it's going to take an enormous amount of energy, like if you want to put it in these terms, to move this great amount of cash and debt, this one and the same, to cause a situation where interest rates will actually rise. So this is why we're seeing in the real world interest rates drop, despite the fact that the Federal Reserve has said that they're going to raise interest rates. What people need to realize, and I know you realize this, but general people have no conception of what it means when the Federal Reserve says they're going to do something. They can't just say anything, and they have to make it happen. They have to get into the market. They have to do all kinds of things and walk through many, many hoops to actually create an environment, in this case, where interest rates will rise. They can't just say it. They don't have magical powers. So, in other words, what I'm trying to say is I don't believe rates are going to rise at all. We're seeing rates drop. I don't even believe the Fed did anything. I mean, they can. I want to show me the proof where they have raised the federal funds rate. I don't know. I don't own a big bank, so I have no
Yeah.
idea what it is. So all I'm trying to say is I think this is a farce across the board here. And even if they did raise the federal funds rate, is it being reflected in the real world? Absolutely freaking not. So what does this mean in the grand scheme of things? Again, let's think about this, Dave.
Mhm.
These banks are the Wall Street banks. Again, who is running all these Wall Street banks? Well, who is running the Fed? Well, the Fed is being run by the Wall Street banks. So these entities here are clearly have another agenda in mind. And what they actually do and what they say they're going to do are completely different things.
There's actually other people out there saying that the Fed didn't raise the rates. They did some manipulation calculations to make it look like they did, but they actually didn't do anything.
Mm-hmm.
And I keep hearing the word QE4 from
Yeah.
all different areas of, all the alternative media and other people. And I keep coming back to QE4, where they're saying that most likely they're going to have to push QE4. I mean, do you think we're heading in that direction?
This is what I want people to do after they listen to this. Just do a little bit of research on Google and find out what banks have been doing since at least 2012. They have been requiring, the Federal Reserve has been requiring the major banks to buy debt. If you ask me, this is a backdoor QE already going on. And again, another thing I've been saying forever is they are going to do things that I personally am not smart enough to realize, but I know for a fact they are going to do things that we can't even fathom yet to try to keep the situation propped up. Dave, the system is dependent on the relentless acquisition of debt in perpetuity. It can never stop. This is why here in our country, we give money away to everyone. We have to keep borrowing cash into existence. It can't stop. Once we stop creating ways to borrow cash into existence and disperse it, the system will collapse. The system is dependent on debt. Period. It is not a wealth-based system. So QE is going to continue going on. The product of the Federal Reserve is one thing and one thing only, and that is debt. That's why they exist, to create debt, period. They can never stop this. This is why we can't have a balanced budget. This is why, again, we are going to see more wars. Because, again, why? War is a major, how do I want to put this? Reason, if you want to call it that,
Mm.
for them to print cash into thin air and borrow it into existence and use it for nefarious purposes. This is what's going on here, Dave. It's going to get much worse. They can't keep this on going forever. The world, in my opinion, is at a very critical juncture here, and we're already hearing about you know the high risk debt market. Oh, it's already showing signs of trouble here. Look, this is a situation that, in my opinion, Dave, when this thing really comes to a head, is going to engulf the world in a situation that has never faced before. Never, ever before, because this is a resource problem. People don't get that. They don't understand that this debt issue is not just about cash. It's a resource issue. All this cash has been pulled from the future so we can sustain the now. Once we stop doing that, we cannot sustain the now, and resources will become scarce. And this is why we're going to end up seeing eventually, at one point, a hyperinflationary event, despite the deflationary event that we're having now.
No, and I agree with you. And you mentioned war, and I talk about war quite a bit. And you're right. The bankers, they will profit from a war. When this system does come down, they can always blame it on the war. They always have a way out of this, and they always do come up with all different types of schemes to work around the system. And what's very interesting, and I don't know if you listened to the State of the Union, it's been all over the web, where the president came out and said that the economy is
Mm-hmm.
doing fine, and anyone that doesn't agree with this is peddling fiction or is a fool.
Mm-hmm.
And it just it's a very odd statement to make during the State of the Union address, to say that we're doing fine, and if you don't believe me, there's something wrong with you. What do you make of his statement?
His statement
Yeah.
couldn't be further distorted from reality. All this man needs to look at, and he knows this, is the labor force participation rate, which is at near historic lows, and the other one is the money velocity. Money velocity, very simply, is the rate at which cash is moving through an economy. We're again at historic lows. I would, my question would be to President Obama is, okay, well, if we have the labor force participation rate at near historic lows and we have money velocity, the rate at which cash is moving through the economy at near historic lows, how can we have any type of an economic recovery? How can an economy recover if cash is not moving through an economy? It can't happen, Dave. It can't happen. I always tell people, look at these two metrics and these two metrics only. Don't look at the phony garbage that Obama, maybe he believes his own BS.
Mm.
I'm sure he does, maybe, or he's just again, pushing the narrative. It's just a narrative, and that's it. Everything is okay here because there are so many simply zombified, brainwashed, brain dead individuals who cannot, absolutely cannot think outside the box. They are so indoctrinated into the school of thought that they're being told and force fed by the mainstream media that they can't even, these people can't even, I don't know, they're very interesting, and I think that's part of the issue here of a dumbed down society. And unfortunately, it appears that your listeners, you yourself, are able to see through that and understand what's actually going on. And again, this is why I think it's so fascinating, like we were talking about in the pre-interview, why we're also fixated on all this, because we're going, wow, how come these people cannot see what is occurring at this particular time? Again, they're believing the mainstream narrative that everything is just okay. And they're sitting there watching their nonsensical shows, being entertained by whatever they have to do. And again, this is the people that are going to wake up at one particular time when it's already too late, and that zombie apocalypse is going to actually occur when these people wake up and say, "Hey, this has all been a lie. Well, what's really going on here?" They have no conception of the debt-based economic model. They have no idea of how cash actually works, how money actually works, and how the system is, clearly rigged against them. And this is it. And it's just too much. It really is.
It's funny you say that, because I think a lot of people are seeing the oil prices drop, and you go to the gas station, it's much cheaper now, and a lot
Mm-hmm.
of people think, oh wait, the stock market is up there. It's still, what is that, 16,000 or so points or so.
Yeah.
The fuel prices are lower, so the
Mm-hmm.
economy must be doing well, because
Mm-hmm.
why would all this happen if for this to happen? I mean, it makes no sense why the economy wouldn't be doing well, so the president must be right. And we continually see oil prices drop. I mean, what is your take on this? I mean, it's really dropping
Yeah.
fast and hard at this point, oil.
Well, there's a lot going on with regard to oil at this particular time. We have, since the whole issue has been with Iran's glut. First of all, we're awash in oil. That's number one. Number
Mm.
two is now Iran is going to be pumping oil out and is going to be distributed all over the world too. So we have that issue as well here. There's a lot going on behind the scenes. Why Saudi Arabia is doing what they're doing at this particular time. They're trying to create some type of an economic warfare on any other country that wants to export their oil here. So they're deliberately driving the cost of oil down. They're trying to shut down the shale industry as well. There's a lot to this. There's a lot to it. But it's so interesting. I remember the day the mainstream financial pundits were coming out saying, hey, low gas prices is going to be a boon to the economy. Well, what have we seen? We've seen the market melt down since the oil has been dropping. Oil is, see, what people don't get as well is oil is a currency, and it is also in many ways it's a currency for the Middle Eastern nations, and there is so much investment in it by banks that, believe me, they're not going to allow this to continue. At one particular point, I don't know when that's going to be. I had thought, honestly, we hit a bottom a couple of weeks ago here, but we did fall again through the technical levels. And once you break those technical levels, it's hard to go back up here. But we're going to reach an inflection point, whether it's more war or whatever it's going to be. But who's going to end up losing in all this, Dave? It's going to be the people. They always lose.
Yeah.
Will there be some kind of a bailout for the industry? Who knows? Maybe you and I will be paying for that too. We're definitely going to be paying for a bailout with regard to this Obamacare thing. There's no doubt about that. That was written into the law. A lot of companies, like United Health, for example, are already talking about backing out of Obamacare because they're not profitable. But again, Obama promised, hey, you know what? If you lose money here, the people, we will bail you out. So it was a win-win for these people. Again, this is just the ugliest thing. It's a thing that I've ever witnessed in my entire lifetime with regard to this twisted financial system that is being played on by politics right now, especially in the election year. So they're going to, again, with that said, they're going to try to prop this up, Dave, and keep it propped up. Because if this all crashes it down now, while Obama wants to get another Democrat in there, that's going to really hurt them.
It's funny because after he gave his speech, we saw the market drop the next day.
Yeah, I know.
We saw all the bad economic indicators come out the next day. We saw more layoffs come out. I mean, Johnson & Johnson's laying off. I mean, we just see tons of companies laying off left and right here. We see retail stores like Macy's and H.H. Gregg and Best Buy all coming out saying the holiday season was absolutely awful, and there's more stores reporting this. So, everything that he said is completely ridiculous. And
what about Walmart? What about Walmart?
Walmart is just, I mean, this is one of the biggest indicators of how the economy is really doing.
Kohl's too. Kohl's is another one that's talking about closing a bunch of stores here. Let's look. It's interesting. You talk about when we talked before about entertainment. Netflix just came out with their earnings. They beat on the top and bottom lines, and then after hours, it's soaring. So people are again sitting there watching their TVs, trying to entertain themselves. Meanwhile, the companies like Intel, companies like IBM that reported today is tanking.
Yes.
So that this is a bigger picture of what's actually occurring in the economy. Well, people sit there and entertain themselves.
Yeah.
It's craziness.
Do you think that I'm going to ask you for a prediction here, and everyone predicted 2014 we were going to have troubles, 2015. At this point in the beginning of this year, it's been so terrible already. Yeah. Do you think there is any type of improvement at all that the Fed or the government or the World Bank or the IMF can possibly do to fix any of this?
Well, this is what I see here going on. We've now had the worst starting year for the stock market in history. In history. Again, this is a bubble being inflated by debt here. I think the market has more to fall now that we've broken some major technical levels here. Despite today, the market finished up, I think the Dow finished positive 28 points, which is basically flat. What can they do to prop this up? This is what I think we're going to see. Again, we got a reading out of China today, a 25-year low with regard to their GDP. The market was actually up earlier. As a matter of fact, when that news came out, Dow futures were up over 200 points. And then when the reality set in. But the reason why that happened was on speculation, once again, that we're going to see more stimulus. Again, more stimulus out of China here. We're going to continue to see this stimulus. They're going to continue to stimulate, continue to print. What I want people to understand is this, and I got into a conversation earlier with a friend of mine about it. When a world central bank decides, like the Federal Reserve, decides to print money or stimulate, what are they actually doing? What they're trying to do is pull demand from the future, which has to balance out. They can't just create demand and not have it balance out. So again, this is a mechanism which will cause a temporary boost, or it's supposed to, but again, it will balance out. Are we at that moment where it's going to balance out? This is clearly what we need. We need this thing to wash out. It's such a shame that the 2008 event was not allowed to correct in the way it should have. All the market was trying to do was to determine fair market value. That was it. The Federal Reserve decided to jump in there and say, hey, no, we can't let this happen. I've taken a lot of heat for this, Dave, but I'll say it here on your
Mm.
show. The first time when the Fed started easing, the first time when we hit Dow 6,000, I said, okay, you know what? Maybe we need a little something to just, put a bottom in here. But then when they came out with QE2, I started saying, hold on a second, what's really going on here? And then we had Operation Twist and blah, blah, blah. So the initial QE, I was kind of behind it a little bit. And believe me, I've taken my share of beatings by people for it because, again, I'm a free marketeer. But again, in retrospect, it should have never happened. They should have let the too big to fails fail. All of this would have been played out by now. Would have had a real economy and a real market. We do not have that now. Everything is fake across the board. The economy is fake. The markets are fake. Currencies are fake. Nothing is real. And again, without any doubt, I can say this: we will hit a moment where all of this is going to correct the fair market value, and that moment is going to be ugly.
You said that we should have had the correction back in 2008, and we've gone, what is it now, 8 years since that
Mm-hmm.
period. From what they've done from 2008 to now, is this correction that is coming going to be much worse than 2008?
By exponents. Again, all they've done here is attempt to pull demand from the future by quantitative easing, by money printing, creating a bubble in debt unlike anything we have ever seen in the history of the world. And all of this, again, will correct the fair market value. So what does that mean in the grand scheme of things? I have no doubt that this market is still massively overvalued, probably by I think a Dow 5,000 may be fair,
Wow.
possibly. Again, what does this mean for other things? When this all comes down here, what we're going to witness is a very interesting event, and that is this. All of this cash that's going to leave certain parts of the market, the debt market is a big one. See, what's going to happen here with regard to interest rates is very simple. Once it comes to realization that the debt is worthless, you can only imagine what that's going to mean for interest rates. They're going to skyrocket on their own. When that happens we're going to get massive amounts of pressure on equities. So all of this cash will leave the debt market. All of this cash is going to leave the stock market. It's simply going to look for somewhere to go. It's going to look for undervalued assets. I think you know where I'm going with this.
Mm-hmm.
It's going to end up going right into hard assets. It's going to go into gold. It's going to go into silver. It's going to go into lead as well. Because, well, again, I have no doubt that when this happens, there's going to be war in the streets of every nation on earth, especially here in the United States, where we do have, unfortunately, I hate to have to say this, the most dumbed down population on the face of the earth. But I really do believe that it's the mission of the mainstream and President Obama, of course, to keep people believing everything is okay right up until the very last moment. And we've seen this throughout history, and it's going to happen again, no doubt.
Greg, for my last question, for those people who are, going to work every day thinking everything is fine, what are they going to see and what are they going to feel when this thing, starts to fall apart? What should people be looking at and to understand that something's going on? Because we know that Obama, the corporate media, they're going to make it seem like everything is still fine. But what should they look at and what are they going to feel when this whole thing starts to come crumbling down?
Well, the number one place they need to look now, especially if their employers offer a 401k plan, is look at how much cash they've lost just since the beginning of the year. Most people are told to maximize their 401k plan. Usually this is a good idea. So you get the biggest input from your employer as well, the match. But this is going to evaporate. Again, it's a false hope here. They've put all this cash into a grossly inflated market, and they're going to go, wow, what happened to all this? Now I'm going to be working for another 20 years. This is going to be different, Dave, this time. When the market comes down this time, we're not going to get a bounce like we did last time. Most people say, it doesn't matter, it's going to bounce. I don't think so. What is the Fed going to do? Ease more? go. I mean, obviously we may end up seeing. We already have real negative rates. If the Fed were to actually get in there and say, okay, you know what, we're going to go negative, they're not going to say that. They're going to call it something else. They're going to find another way to twist the wording and do other things that are behind the scenes that we have no idea about, that no one knows about. Again, this is not a transparent organization. They are going to do things that we cannot believe. I keep saying the same thing. And they've been doing things that we cannot believe with Operation Twist and all this QE and money printing and finding reasons to borrow cash into existence, creating reasons. War is one of them. Not securing the borders is another one. This thing with Iran now is another one. You just keep going on and on and on. These are all mechanisms to borrow cash into existence. That's it. The system is dependent on it 100%. That's it. That's all the Federal Reserve does is create debt, and that's why they exist, is to create debt and create debtors, debt and debtors, not wealth and rich people, debtors. That's why most people in the United States are debtors. You're born a debtor. My God, you want to look at the national debt here? A child born today in America owes the government, the moment it takes its first breath, over $55,000. The moment it takes its first breath, yeah, let's have all the big celebration, but you're looking at a little debtor there. And any way people want to look at it and say, oh, that's not my problem. Really? You have a credit card? Are you borrowing cash to buy your house? Are you borrowing cash to buy your car? What do you actually own? What's actually you don't own anything because the cash isn't even yours. Whatever cash is in your pocket doesn't belong to you. It belongs to the Federal Reserve plus interest that they print out of thin air. So that's all this is. Every dollar, every bill is a unit of debt. Period. Is not a unit of wealth.
Wow, Greg, how can people get in touch with you once again?
Just I'm pretty easy to get in touch. My website, traderschoice.net. My YouTube channel, Gregory Mannarino. Just Google me. I come up everywhere. It's pretty simple.
Greg, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Thank you very much.
Great to be here. Thank you.